At first glance, it seemed unthinkable. Washington and Tokyo formed a partnership proven by time, shared bases, joint exercises, meticulous security coordination, and economic chains woven together by thousands of quiet links. Even so, in recent months, headlines across the world's biggest newspapers have repeated a refrain that once felt inconceivable: a crisis in the United States-Japan axis. The Financial Times describes an unprecedented estrangement between allies. Nikkei warns of a systemic risk to Indo-Pacific stability, and Reuters sources inside Japan's government admit that confidence in Donald Trump is unraveling quickly. The spark, simple to state yet enormous in impact: a trade war unleashed by the White House against its most important partner in Asia. The thread that pulls everything loose is tariffs. Back in the Oval Office under the banner of America First, Trump returned to his favorite instrument of pressure: surtaxes. If before the rhetorical artillery aimed primarily at Beijing, this time the chosen target was Tokyo. Autos, electronics, steel, white goods. An abrupt escalation of tariffs was justified as an antidote to the undue advantages of Japanese conglomerates. To the domestic audience, the narrative sounded familiar. In the Japanese capital, it landed like a seismic shock. For the first time in decades, an American president publicly displayed disregard for an ally whose economy has long helped maintain equilibrium in the US market. In a closed parliamentary session, as reported by the local press, Japan's Prime Minister was blunt. "If Washington treats us as an opponent, we will have to act as one." The line became a watershed. From there, reciprocity took shape. Ideas that, until yesterday, were taboo entered the radar. Sources cited by Bloomberg say Tokyo is studying curbs on sales to the United States of strategic goods. Front and center, seafood, above all tuna. For many American consumers, that may sound like a detail. To those who know the chain, it is a keystone. High-end dining, the ubiquitous sushi culture, and part of West Coast logistics depend on Japanese imports. Data from the United States Department of Agriculture indicate that more than 70% of premium-grade tuna comes from Japan, and that flow can now be throttled. Nikkei outlines a phase script. First, export caps. Then, if Washington persists with tariffs, a full embargo. But fish is prologue. Back-channel conversations reported by the Wall Street Journal point to a move of another magnitude, shedding portions of U.S. treasuries held by Japan. Japan ranks among the largest creditors of the United States, with a portfolio exceeding $1 trillion. It is a financial instrument that works as both armor and blade. A divestment, even a measured one, could sow panic in the bond market, lift interest rates, scuff the dollar's credibility, and set off a fresh spiral of turmoil. In Washington, the message is understood. Even so, Trump keeps raising the stakes. In a Truth Social post, he thundered that the United States will no longer feed other countries and accused Japan of exploiting the American market, statements read in Tokyo as public humiliation. Figures in Japan's establishment privately labeled the president's style erratic and dangerous. A former ambassador told NHK outright that such leadership corrodes foundations of trust built over decades. In the quiet of diplomatic corridors, Beijing is moving pieces. The South China Morning Post reports closed-door meetings between Chinese and Japanese officials to discuss energy and settlement arrangements in local currencies. The reading in Beijing is crystal clear. A weakening United States-Japan link opens a historic window of opportunity. If Washington persists, Tokyo may recalibrate its geopolitical compass toward China. For the United States, it would be a strategic earthquake. The economy that for years underpinned American interest in the region could start orbiting Beijing. Inside Japan, the debate has heated up. A Yomiuri Shimbun poll indicates that more than 42% of respondents no longer see the alliance with the United States as a security guarantee. the highest level in 20 years. Among younger voters, sympathies are growing for those who offer capital, market access, and technological cooperation without conditions considered degrading. Economists revive an uneasy parallel. In the early 2010s, China throttled rare earth exports to Japan, a warning shot. Now the siren is being readied by Tokyo, only aimed at Washington. For the American capital, this is a geopolitical nightmare. The framework of China containment in the Pacific rests to a great extent on the United States-Japan machinery. If that pillar cracks, the board rearranges itself immediately. South Korea, Taiwan, the Philippines, all would be compelled to reassess alignments, while Beijing could add, beyond a heavyweight economic partner, a world-class military ally. Unsurprisingly, the Financial Times reports that Japanese funds have been trimming, quietly, their positions in treasuries. The amounts remain modest, but the direction is unambiguous. Managers speak of diversification and risk mitigation. The market reads it as a message. Japan is signaling a willingness to play hard, and if the current White House course holds, the inflection could become irreversible. The irony, underlined by analysts, is that the United States itself is nudging its ally into Beijing's embrace. The louder "Make America Great" is repeated, the flimsier the seams of its alliances appear, and it is not only the seafood ledger or the debt market keeping the Treasury awake. For the first time, Tokyo is floating the idea of targeting a sensitive tendon of the American economy, the automotive sector. According to Nikkei, government circles are considering a redesign of investments by the Japanese giants, Toyota, Honda, Nissan, moving new plants off American soil to other parts of Asia such as Indonesia, India, or Vietnam. Such a pivot would cut tens of thousands of jobs in the United States and scramble supply chains. Projections from Goldman Sachs estimate that a pullback of Japanese capital in the US auto base could subtract 1 percentage point from GDP over the next 3 years. It is no surprise, then, that Wall Street is jumpy. According to Reuters, after rumors of Japanese measures, shares of General Motors and Ford fell by more than 6%. Collective memory reaches back to the 1980s, when trade disputes with Japan left deep marks on American industry. The crucial difference is that back then, there was room for agreements. Today, under Trump, the word compromise has lost ground. There is also a symbolic component at a boil. In the corridors of the International Monetary Fund and the World Bank, the Financial Times reports, conversations are circulating about a possible Japanese openness to initiatives to expand BRICS Plus, for now in observer format. The mere fact that the idea is in circulation already shifts mental maps. Not long ago, few would have imagined Washington's closest ally sounding out a platform the White House tends to deride. Set side by side, Trump's tariffs, the threat of closing the tuna spigot, the potential partial dismantling of the Treasury's portfolio, the cooling of outlays in the auto sector, and a cautious rapprochement with China. The pieces form an uncomfortable mosaic. The United States risks losing not just a partner, but the strategic foundation of its presence in Asia. None of this would have gained traction without the choices of the American government itself, observers argue. The diplomatic game has entered a stage where survivalism and cold calculation overshadow the liturgy of communiques. If Trump persists on this path, his name may be recorded as the president who dismantled the United States-Japan architecture. The world, then, will no longer be the same. And in that reshuffle, it is plausible to imagine Japan not alongside Washington, but occupying the opposite position on the barricade line.